Yeah, it really grabs your attention when a huge company like Nvidia suddenly sees its stock price take a tumble.
Hmm.
So what's going on there? Well, it looks like it's all connected to these new U.S. government export rules.
Right, the ones hitting their
Yeah.
advanced AI chips going into China.
Exactly. And we're looking at an article here from the Motley Fool. It just came out yesterday, April 16th, 2025. It really breaks it down.
Yeah, it's a good source for this.
So our mission today in this deep dive basically is to figure out what these restrictions really mean, for Nvidia obviously, but also for anyone following tech or maybe thinking about investing.
And the thing that jumps out right away is what specifically set off this latest drop. It was NVIDIA's announcement, April 15th.
Okay.
They announced these new export limits, specifically on their H20 GPUs for China.
Yeah.
And this wasn't just some small tweak.
No.
No, the company actually said they expect to take, a pretty massive charge, $5.5 billion.
Wow. Billion.
Billion, yeah, in the first quarter of their fiscal 2026. And, that quarter actually wraps up really soon, end of April this year.
Okay, so that's an immediate hit.
It is. And it's all tied directly to these H20 products being effectively blocked now. A $5.5 billion charge like that, it signals a really serious impact on their earnings right now.
$5.5 billion in just one quarter. That's Yeah, that's a big deal. And I guess it suggests the longer term fallout could be even bigger for them.
Precisely.
Yeah.
And if you connect that to the wider picture, Bloomberg Intelligence has put out estimates.
Oh, yeah. What are they saying?
They're estimating the potential revenue loss for NVIDIA just in fiscal 2026 could be somewhere between $14 billion and maybe even $18 billion.
14 to 18 billion.
Because of these updated rules.
Yeah.
So, think about it. That's a huge chunk of potential income that's suddenly looking pretty risky.
This whole situation, it feels a bit like deja vu, doesn't it?
Dude.
Hasn't Nvidia dealt with export controls to China before? This isn't totally out of the blue.
You're absolutely right.
Yeah.
No, this is kind of an ongoing story. It's been evolving. If you
Wow.
go back to 2022,
Right.
the government first put restrictions on NVIDIA's, like top-tier chips, the A100s and H100s.
The really powerful one.
Exactly. The concern back then, as we understood it, was about, potential military uses for that kind of processing power. These things are beasts, right? Built for the really complex AI stuff.
And Nvidia didn't just roll over, did they? I remember they tried to find a workaround.
They did, yeah. They designed these slightly less powerful versions of the A800 and H800.
Ah, right. The compliant chips.
Essentially, yeah.
Yeah.
Chips designed to meet the rules as they were then.
Yeah.
And they actually sold quite a few to big Chinese tech firms. It showed they could, pivot.
But that didn't stick either, did it? The rules just kept getting tighter.
Nope. Didn't last. By 2023, sales of those chips, the A800 and the H800, they got restricted too.
So what was Plan C then?
Well, Plan C was the H20. Back to the drawing board again. They developed this H20 GPU. It's based on their latest architecture for high-performance computing, really important for training big AI models.
Another attempt to make something powerful but still allowed.
Basically, yeah. Trying to thread that needle again. But, well, as this latest news shows, the government, now under the Trump administration, has effectively shut down those sales too.
So it's this cycle. Restriction, adaptation, new restriction.
Exactly. And it really highlights this sort of ongoing tension, this back and forth.
And you can really start to see the impact of all this tightening on NVIDIA's actual numbers in China. The article points this out, right?
It really does. The figures tell a pretty clear story. If you look back at fiscal 2022, China was more than 26% of NVIDIA's total revenue. Huge chunk.
Over a quarter, yeah.
But fast forward to fiscal 2025, so the year just ended. That number dropped to just 13%.
Wow, halved.
Pretty much. Now, don't get me wrong, NVIDIA's overall sales globally grew like crazy, about 69% annually during that time.
Okay, so the company overall is booming.
Oh, yeah. But the growth from China specifically, much slower, only 34% annually. So that contrast, it really shows the direct hit these restrictions are having on that specific market for them.
Right. And predictably, Wall Street's watching this like a hawk. We're seeing analysts react now.
Right.
What's the general feeling? Are they adjusting their forecasts?
Yeah, good question. How are the experts reading this? Well, it's not surprising. Several analysts did cut their price targets for NVIDIA on April 16th, right after the news.
Like who?
Let's see. Vivek Arya at Bank of America, he went from $200 down to $160. Harsh Kumar at Piper Sandler dropped from $175 to $150. And Srini Pajuri at Raymond James Similar move, $170 down to $150.
Okay, so definitely some downward visions there.
A clear trend of analysts kind of reassessing things because of these new rules.
But it wasn't everybody cutting targets, was it? I think I saw some held firm.
That's right, not a total washout. Analysts at Cantor Fitzgerald, Evercore, Wedbush, they kept their existing price targets. And maybe most notably, Joseph Moore over at Morgan Stanley, he actually came out and reiterated Nvidia as his top pick in the semiconductor space.
Huh. So a real mix of opinions then.
Definitely. It shows there's still a lot of uncertainty, different ways people are weighing the risks versus the opportunities here.
So even with some of those target cuts, where does the average or median target price sit now? Does it still suggest much upside from where the stock is trading?
Yeah, good point. Even with those reductions, the overall median target price only nudged down a bit from about $175 to $170 a share.
Okay, and the stock's around $104 now.
Right, so $170 still implies, roughly a 63% potential upside from the current price.
63%, that's still pretty significant.
It is. It suggests that, okay, yeah, this China situation is a serious headwind, but the market overall, or at least many analysts, still see huge potential. They seem to believe Nvidia's dominance elsewhere and its innovation pipeline will kind of win out in the long run.
It says a lot about their core AI strength, I guess.
Exactly. That seems to be the feeling on the street, broadly speaking.
And Dan Ives at Wedbush, he's quoted saying investors should look past the chaos. What's his thinking there? Why so bullish despite this?
Well, Ives's view, and it's an interesting one, really focuses on Nvidia's unique position. He sees them as basically the key supplier for the really powerful processors needed for AI globally.
The engine of AI, essentially.
Pretty much. And while he definitely acknowledges this is a strategic blow in China, he sees the immediate financial hit as, quote, relatively small when you look at Nvidia's entire global picture and future growth prospects outside of China.
Right. Keep it in perspective.
That seems to be his angle, yeah.
And even with these China issues, the overall earnings growth forecast for Nvidia next year is still looking really strong.
It is, remarkably so. The current average forecast for earnings growth in fiscal 2026 is still pegged at a really robust 51%.
51% growth. Wow.
Yeah. So when you take that high growth rate and you look at the current valuation the stock's trading at about 35 times expected earnings, some analysts are actually arguing it looks, well, kind of cheap right now.
Cheap, even after its huge run-up.
Relatively speaking, yeah.
Yeah.
Compared to that growth forecast, that's a key point for investors trying to weigh the current price against future potential, even with these China headwinds.
Okay, so pulling it all together, what's the main message for investors looking at Nvidia right now? The article kind of nudges in a certain direction.
Yeah, the takeaway seems to be aimed at patient investors, those with a longer-term view. The article suggests maybe considering starting a small position now at this lower price.
Buying the dip, essentially, but carefully.
Sort of, yeah. The thinking is based on the company's underlying strength, its dominant market position in this exploding global AI market, even while it's navigating these pretty serious geopolitical issues with China.
Right. So to kind of wrap up, it's clear these latest U.S. export rules are a significant hurdle for Nvidia in China, no doubt about it.
Absolutely.
We've seen the stock react. We're seeing analysts adjust their numbers. It's definitely changing the landscape for them there.
And it really leaves you with a big question, doesn't it? You've got Nvidia with this incredibly strong overall growth projected, this dominant position globally in AI. So how are these ongoing, evolving restrictions ultimately going to shape their long-term strategy? Where will they focus R&D? How will it affect their market share in different parts of the world? It's definitely something to watch.
For sure. And it makes you think bigger picture, too, right? About how these kinds of restrictions ripple through the whole global tech world and what it means for competition in AI, which is just moving so incredibly fast. Lots to chew on there.
Definitely a lot to consider for anyone interested in this space.